Hey there, it's Bill with Smart Trades. It's Monday, May 30th around 3:50 p.m. And as you'll remember last time, I talked about the current decline off of the highs at 1370 as being corrective. Indeed, it's moved a little bit lower than I had anticipated. I thought we might have been bottoming around the time of that report. But indeed, I think the decline continues to look corrective. Now, here's a context that may fit this decline. I've had problems in terms of the long-term structure, counting the recent rally as part of a corrective pattern. And here's one possible scenario. Actually, I have mentioned this broader count in the past, but not this this triangle pattern in the current decline. Here you can see it on the Dow, and this calling for the rally from March of 2009 as wave 1 up, 2 down, 3, and that we're currently working on 4. One thing that helps support the idea that this is a third wave, and it's a question of what magnitude it's a third wave, but the probability I think that this recent peak is a wave 3 is the very high ADX reading, which you can see on both the Dow and the S&P. That's typical of a third wave peak. Now here's a daily chart, and this breaks it down a little further and shows that indeed the possibility that this is a third wave of a somewhat smaller degree. And you can see we've pushed slightly through the trend line and held. That's not a big deal in my opinion, and in fact I think if you look at it on the Dow, you'll see that we've actually held that trend line. Now, again, here's a possible, one of the possible scenarios that we have, looking for the rally off of the July low as a 1-2. We have a wave 3 here. There's it's an imperfect 3 to be sure, but nonetheless it can be counted as such. And 1, 2, 3, 4, 5 of 3. Wave 4 down, perhaps more likely that this is still A, which is what I've been favoring for some time, but less likely that this is B in a flat, because the decline from here has wasted a lot of time. Usually a C wave off of a B wave in a flat is going to be very impulsive and quick, and that has not occurred. So here's a little more detail of the move down from 1370. And again, I believe that this best counts as a corrective decline. This is an updated count from what I showed in the last report with A down and then an A, B, C. This impulsive pattern is actually probably a C wave, and then of B, and then a final C down to what I believe is the bottom of this particular corrective pattern. You can see here we have a nice bullish divergence on the hourly breadth ratios, in this case using the NYSE advancing issues as a surrogate for the overall breadth ratios. Also, I don't usually use gaps. I think there's tons of them. Oftentimes they're filled, sometimes they're not filled for a time. But in this case, I think this is a more significant gap because there's actually an island reversal here. So it's what I'm calling a double gap. And that came in around 1312.62. The actual low, I believe, was 1311.70. So within a point or so of filling that gap exactly. And again, the context here is that this decline looks corrective. It looks choppy. You can count it as a completed correction. And again, the confirming bullish divergence as it approaches the trend line, which is really a signature of the kind of things that I look for in terms of areas to trade. A little more detail here on the possible triangle count. Again, the March low being counted as A, and I think the rally back up to 1370 best counts as an ABC. We'll count that as B. If we are in a triangle, the current decline that we apparently just finished would be A. B is going to take us back up, and then C will take us down to perhaps 1270 or so, if indeed it's a triangle. Now here's an alternate count I don't believe is working, and that is that we have a series of 1-2s off of the March low rather than an ABC. The problem with this is that The second wave 2, which should be of smaller degree, is already larger than the first wave 2. So, in terms of scale, we have a problem calling this a 1-2. It's possible, but I don't believe it's likely. Another scenario is that we have a series of zigzags, a triple zigzag to be exact, off of the July low. Now the problem with this, no matter how you count it, is the zigzags are not consistent in respect to scale. I've labeled it here ABCX, and then you have a very long ABC, and then an X, and then a short ABC. Well, that's just not typical. Usually these are going to be similar in magnitude. You're not going to have an extremely long middle zigzag. Another way to count it is ABCX, ABCX, but then the final ABC is very short in respect to the other two. Moreover, the decline off of the high, again, best counts as corrective. You could count it possibly as a leading diagonal triangle. However, leading diagonal triangles are extremely rare, and indeed, so far, that we have not taken out the bottom of this B wave. It would appear that if you're counting this as a diagonal triangle, it's already complete. So it's a very short and muted start to what would be a crash scenario. Now, again, it's possible, but in respect to scale, the rally doesn't look right, the decline doesn't look right, it looks more like a corrective decline. Again, here are the internals of the possibly developing triangle. ABC up of B, and then perhaps we're working on an ABC of C. Ideally, it should bottom around 1275 if indeed it is a triangle. There's no particular place where this rally needs to roll over. We're in fact at first resistance right now. The next area of resistance would be around 1350 and then 1360. Obviously, if we take out 1370, the recent highs, this count is null and void. The other scenario is that indeed we are in fact carving out a flat, but as I mentioned before, that seems unlikely as well because the time wasted on this first leg down, and again, the corrective nature of that first leg down. So although it's a bit of a leap of faith to count this as a triangle, I think that at this point, given all the particulars, that's the best count. That said, it's definitely not a crystal clear picture at this point. So we'll take it one step at a time as always. But so far, a corrective leg down. If we get a bearish divergence and a corrective pattern back up, that starts rolling over around 1350. Certainly I take a real good look at that, with the next target being 1275. And here again is that the internals of our 5-wave structure in wave 4. However, in this count, we're counting the first leg up off of the March 09 lows as A, the decline to July as B, and a 5-wave structure up. Now, getting a little more detail here, if indeed we do bottom around 1275, we're going to have a 1 = 5 scenario up around 1400. If we get through 1400, the next target potentially is the all-time highs around 1570 or so in the S&P. That would also be the top of this channel, and that would also be an A = C off of the March 09 lows. I've mentioned this count before. And, again, we're getting a little bit far ahead of ourselves. Let's see, first if indeed we do carve out a triangle here. But if we do, and particularly if we get through that 1400 area, which would be the next target, it's certainly not beyond the realm of possibility, and it fits actually very well with Elliott wave theory for a peak up there around 1570. Shifting gears a bit to gold. Gold possibly has peaked. We can count this as wave 1 down and ABC back up. Around 1550, it's going to reach its parallel channel. I think, though, there's a fairly good chance that gold is going to make a new high as silver rallies back to, say, about 42 in an ABC pattern. Silver looks, like a more compelling top. You can see the clear 5-wave structure off of the peak, and indeed a scenario where silver makes a lower peak around 42 and gold makes one last new high would not be a huge surprise to me. Here's the euro, also counting pretty well as an impulse to the downside. I think we have a possible irregular or expanded flat A, B, C developing here. That would target about 144.70 or so, give or take 20 or 30 points for wave 2. But 144.60, 144.70 being the center point of that target area. If we get through there, 147.30 or so becomes the next target realm. If we get through there and this little congestion, almost certainly I would shift gears and think in terms of new highs. That said, the first target again, 144.70 or so for the euro. Bonds, we've mentioned for a long time here that we thought they were in an ABC rally, with their 126 being the ideal target. We've got contract rollover here and such, kind of making a mess of price, but nonetheless the basic pattern is working out. And as you can see in the TLT, we've hit that parallel channel of this ABC. It's certainly possible we're going to go up and tag it again. But what's very obvious to me here is that we do have declining momentum and volume, and certainly I'd take a close look here at the bonds and the TLT for a possible top. They're overdue and they're hitting that channel, and I think it best counts again as a corrective ABC rally near termination. And finally, here's crude. Now, I've posted this chart for some time, and we've looked at the possibility before that it would have peaked obviously at this lower channel, which I'm not showing. That said, the basic pattern from the 2009 lows certainly still looks corrective. We have what appears to be an impulse down, so more than likely, in my opinion, you do have a peak in crude. The top should be in. This chart is a little bit dated from yesterday, and again, we have the impulse down, what looks to be an ABC rally with a possible failure. We'll see. But more than likely it should not exceed about 110 or 111 or so, if indeed we do have a top in. But I believe that we have a top in crude. And again, here's another example of declining volume, and the ADX is declining, showing a lack of upside momentum and impulsiveness. And that's further evidence, in my opinion, that we have a top in crude, and that wave one down, a corrective rally back up that should fail below the highs from late April. Anyway, that's it for now. Hope you're having a great weekend, and good luck in the week ahead. Thank you so much for watching. Bye-bye.